Good morning, everyone. This is Brad Matheny. Today's the 23rd of March, Sunday. I've been going through doing my videos, doing my research for the end of the week, and really for all my subscribers, and wanted to go over some of the things that are changing and will be included for members over the next week or two. So, a couple of things going on. I always work on updates, so that's the one thing that you need to understand, that I'm always trying to find ways to help people that come to my website and join my expert growth services. The expert growth services has grown from a simple kind of a swing trading system into a much more complicated intraday solution. We have the intraday algos, which will probably be blank because I've been working on things right now. Yeah, they're all blank here. But these are the intraday swing trade algos, and this is what I'm going to change up. Let me see if I can come over here and get to, so I'll have to go here, and here, and here, here, and the algos. There we go. Oh, that's probably not going to work. Yeah, so there we go. So these are what the intraday algos look like. And I highlighted this the other day, showing how the system, this was a 15-minute setup. You can see these algos are generating long triggers, hit the targets already. That's what these little pink ones are. You can see the thrusting custom indicator, which is a short-term, kind of like stochastics, but a little different. You can see the bull-bear shift and the bull-bear rank. Now, typically, in a long trigger, like this short trigger here with IBB, you want to see negative thrusting and you want to see negative ranking, particularly a negative 2, 3, 4, or more. Really more like a negative 3 or a 4 or a 5. But you definitely, like in this XOP, this long trigger here is at a 4 now, was at a +8. That's what this shift means. It means that we were at +8. We've recently moved down 4 to get to 4. And you can see the thrust indicator is quite high at 56. So when we get up into the 40s, 50s, 60s here on thrust, that's a pretty good indicator that we're getting some upward movement. Now, generally in a downward move like we see here with XLI, you know, we were at 7. We're now at 4. We've come down 3. We're at a 47.22 thrust with a current downward trend. That means we're in a bit of a pullback. We've already hit the first target. We have the next target at 33.55. We're already up 0.29%. And remember, the stop itself is a soft stop. It's a close below or close above stop. So, you know, you're not going to run these as hard stops. They're going to be basically a line that we wait for a close below. And generally, these work pretty darn well. You got 2-minute, 15-minute, 60-minute, 5-minute, and daily for not only the spider ETFs, but you've also got them for the sectors. So in the ETF sectors, there's around 35, 40 of them, and I'm adding a new list for a stock list for people, and that's going to have about another 30 or 40. So these run over here on my server, and ideally what we have here with the Expert Growth Service for traders is you have the ability to come in here. Let me close this. You get obviously my weekly analysis, my custom indexes, my videos, my SPY cycle patterns that I show you every morning in the morning videos. You get specialized investor update and gold and metals update. But then you also have these weekly scans, and you have the live trades algos. And the live trades algos, again, because I reset the server, aren't going to probably have any data here. Oh, it does have some data here. So here you have a live trade algo that updated as of last Friday, and you can see some of the triggers. Apple short from 312 up $2 or 2.5%. Looks like I've got Apple in here twice. You see here Adobe short from 314 is up 2% already. You've got ADP short from 311 is off 0.93. ADP twice, 3 times. Wow, okay. That means it's fed in there twice. Yeah, we've got some sort of a feeder thing going on here. I will check that tomorrow. It could be because I've been reloading the server. Baidu is from 317. This was a big crush on Thursday, Friday with the Chinese markets. CHKP, Chesapeake, 319, off 1%. Cisco from 312, up 0.46. Cisco, CTAS from 312, up 0.08. Now, we've been moving kind of sideways, so not going to have a whole bunch of big numbers here. Where we may have some big numbers is over here. Go back up to the top. Sorry, guys. These are kind of long lists, but over here in the foreign ETFs. So we may have some big numbers over here. BRZU, 319 long. EFA, 318. Euro. So we got some IEF. This should be India. Long. 2%. See here, pretty much everything's rolling, fairly new triggers, just 3 or 4 days old. Minus 15 for yen. EDC, flat. EFV, up 11%, pretty good. Already hit the target for half. And that's it. So now, as these roll, this is part of the service. You get swing trading here, so I'll give you an example. Right here on live trades, you get swing trading, end of day swing and targeted trading. Intraday signals now give you, again, the ETF sectors and the spider sectors using my TT scanner software. And what I'm working on right now is, I don't know what I'm going to name them yet, but number one is this Fibonacci system. So understand that this Fibonacci system is designed to present the upper and lower target levels based on Fibonacci. What I'm going to do is I'm going to move forward through this 5-minute ES chart, and you will see as we move through and it identifies highs and lows, it projects upper and lower target levels. So pay attention to these levels and how things play out as we start to move here, because these you're going to find are going to turn into very solid support and resistance areas. You see how we have this area here, support and resistance. This also gives us the bullish trigger level here in green and the bearish trigger level here in red. These are essentially breakout trigger levels. The last breakout trigger we had was above this green line, and then we rolled below this, looks like red line right here. Which means our last trigger was bearish. And then we moved down into this trigger. So now we've either got to get above this level, 5706 roughly, or this level, 5687 or 88. And watch how this plays out. Watch how this rolls through the downward cycle trend. So see, now we're below the trigger level and our green trigger level is moved down. We're now reaching these lower support levels, and watch what happens. Break through, pause, revert. Our trigger level moves down. Notice our green trigger level is moved down. Notice this level of resistance right over here. That's right around 5680, 5679. Watch what happens. Continue to roll down. Notice that the levels are starting to redraw. We have a very high level way up here. We start to build some support. Barely get above the level. This does not qualify. I mean, technically it does, but we need to see confirmation. No confirmation. We have confirmation now to the upside The level has moved down. We're technically above it. We found our support back over here. We're starting to look to the upside, running up to this resistance level, or this resistance level. We have support right here at 56.62. So watch how it plays out. We are now long. We're running sideways. We get a breakdown level. Okay, that's fine. That's off this new high. We still have these upper targets. We roll through this level. And generally, so now we're below the red level again. So this is now rolling back down. And then we're back above the green level. So we're going to go ahead and see if we get confirmation back above the red level. There we go. Long again. And again, these are 5 minutes. Notice the target levels have come back down. Come back over. We're rolling. We're rolling. Still holding support. Broke above our resistance level and now headed up towards these target levels. So again, the Fibonacci system, and we've rolled down, gotten below this. This is technically a bearish trigger. We got to wait for confirmation. We get confirmation. We're below our support level. We could be headed back down here. Let's see what happens. We rolled down. We set up a new low. We're just off this support level. There we go. Got below the support level. We're technically in a very solid downtrend now. Looking for this breakout of this green line. You can see that we're basically right below support, pretty much right at support right now, dancing around support. And again, you know, we're just early morning so far. There we go. Clean breakout to the upside, rolling higher. Solid uptrend, targeting these upper support or resistance levels up here. Rolling, hit the upper resistance area, the cyan level right here. Stalling out. Trying to break above. There we go, a little bit. Stalling out. Okay, so now we've moved the green level down. So a breakout level would be above this 57.03, and a breakdown level would be below this 56.90. We continue to move forward. We roll. We get above the green level. Green levels move down a little bit. We're now trying to target up here to 57.29. That's what price is attempting to do. As we roll down, these can move. So pay attention. If we hold up, okay, we're getting into weakness. We're getting into sideways rotation. We'll see what happens. We're only at 11 o'clock. We rolled higher. We rolled down. So again, look at these Fibonacci levels. You see how we have this red line here, green line here, red line here, green line here. This is a pretty solid congestion area here. When the trigger levels start to consolidate, this is basically congestion. It's a major support and resistance level. Okay, we broke down. We have confirmation. We're now in a downward trend. We need to get above that little green level. There it goes. Rolled back up. We're in an upward trend. Rolled back down. We're getting right into this consolidation right through lunchtime. Breaking downward, running into support right down here. Let's see what happens. Rolling. And now technically we're green again. So when you get in between these levels, this is kind of neutral. Meaning we're already below a red level and we're above a green level. The red level is above the green level. We're kind of neutral right here. We need to see it clear away from this range. There we go. And there's the breakaway. So here we go. Higher, up to the target level. May get up here. There's two more target levels up there. Stalling out. $1,300. We're at the end of the day. And we'll just kind of see what happens. That's it. That's the end of Friday. So I wanted to go through this with you because these target levels and or the direction is now going to be available to you in the Expert Growth website. So this is something I'm pushing out to members to give you the ability to have access to the trigger levels, the direction, and these Fibonacci levels as we roll forward. Secondarily, I'm also providing you with the new option strategy, which is based on my full spectrum analysis code, and give you an idea of the full spectrum analysis code. What we're looking at right here, guys, is essentially an automatic or automated call and strike price level system. So what happens here, we have trending. Let me explain. This is the call, strike, call level and strike price. There's a put level and strike price below here. Spread this out. So there you go. You can kind of see it in dark red. And now we have the predictive modeling system here. So look at this upper level in red, this lower level in green. Let me show you. These are actually blocks. It draws them differently as I spread them out. So these are predictive modeling, okay? Predictive modeling is the ability to try to learn from past price activity and predict what's likely to happen. So when you see them both going red right over here, okay, this is telling you that you're in an uptrend, but it's predicting that it's going to roll down over the next 5 to 10 bars. And here you're green in a downtrend. This is telling you that it's going to roll up in the next 5 to 10 bars. Then when you get into this mixed activity here, basically you have short-term and intermediate term here. This is telling you that you're going to get mixed, and then it's going to want to go higher, and then you're going to get mixed again. So let's go forward through this, kind of show you what happens here. Let me move this, and we're in auto size. So we roll forward. There's our call strike. We're in a bearish trend. That's what this is telling us, that the trendiness system has indicated that we're in a bearish trend here. And now we're getting upward trending. So essentially, you want to play your puts, but it's showing you that we are likely going to roll to the upside. That's what that's telling us. Next bar. Now this is, again, relearns. So we're getting that mixed trigger. We're still in bearish. And now we have these mixed triggers here. Next bar. We have the roll up to the upside. And we're still in bearish trending. This was 5 o'clock. This was news. Next bar. We're still in downward trending. You can see where the put level is and the put strike level. So essentially at this point at the open, what you would do, you're below the put level right here. Let me show you how this works. You're below the put level at the open, and you're very close to the strike price level. So what you would do is you would theoretically try to, given the fact that we're bearish, try to move an option or set an options trade with a strike price close to this, which should likely be 562, or depending on where we opened at 562.78. This is a 5-minute chart, so you'd have to set it down to 562. And of course, in that 5-minute time frame, you got a little bit of profit, not much. Now we roll into this mode. We're still banking now that we're going to be rolling downward. Predictive system is telling us that we should roll down in the future. So let me come over here and kind of show you here. This is predicting that we should roll down. Don't know how much, but we should roll down. So now we move forward. Here we start to roll down. And again, we're below the put option, but put strike price. We never get above the call option trigger level. That's the call option trigger level at 563.29. We roll down. We're below the put. Notice the put level's way up here. We never get above the call, so you theoretically are running the put option right now. There's the updater. And we roll down again giving you very clear direction that we're already below the put level, which means we can run our puts. You basically want to watch these call and put levels. When we get above them or below them, that's where we get our triggers. So here's the put level again, breaking down very hard. Of course, the strike price, you're going to be in the money on this, so you could pick a level, down below that's not quite in the money, but this is telling you that you got a very good opportunity. And remember, the predictive modeling predicted that we were going to go lower. So look at how it played out. Now we come back over here, down lower again, very tight ranges here, big breakdown range. Should be auto scaling, so huge breakdown below the put, below the strike. We did get an open here that was just above the call level, so you might have hedged with a little straddle, but big breakdown on the put side. Again, this is 5 minutes. Every one of these gives you an opportunity every 5 minutes. Here we come down to the strike and the put, very tight. So call level and strike here, put level and strike here. We never actually hit any of them, so that was kind of a nothing bar. Here we have the call level here, the put level here. You're already below the put level. The put is the dominant trigger. We're in bearish trending here, so you can see we're in downward trending. Now we're getting a warning that we might get some upward trending. So at this point, the predictive modeling system is starting to warn that we could get some upward trending. Okay, so we come in here and we roll forward. Goes down a little bit further, still warning of upward trending right here. Still warning of upward trending. Still warning of upward trending. See all of this? This green down here at the bottom? To me, that means that you should be preparing for a roll to the upside. That's what that's warning. And we roll down into bearish trending. We get our move up. We get a roll. Still bullish trending. All of this is predicting that 5 to 10 plus bars out, we're going to get into bullish trending. And here we go. Now you see we move into neutral, okay, where we were bullish before. Here we go into the bullish move. Watch what happens. We get into bullish trending now. So we're bullish, bullish, bullish over the next 5 to 10 bars. We roll up. We roll sideways. We roll sideways. Now we're into bearish trending over the next 5 to 10 bars. So we've rolled out of this. And you can see we start to move down, start to move up a little, and gone back into bullish trending for the next 5 to 10 bars. Notice how the predictive levels have gotten very high. Okay, so understand that we had a nice little trade here. Now we're getting into some real volatility. That's what's happening here, is we're getting into volatility. So at this point, the put levels are right here. And that means that basically you watch this level, 559.30. So basically 559 gets below 559. You can put a put level or a strike down below. We're rolling. It doesn't do much. We're rolling into bearish trending. We roll up over here into a breakout. Remember, we had that bullish trigger way back over here, 5 to 10 bars out. So this, it actually goes 5, 10, 15, 20 bars out. And this is intermediate. So the intermediate is 10 to 15 bars. The short is 5 to 10 bars. We roll out. We go into bullish trending here. We've got our call and our strike prices sitting up right over here. And there we are. So we're below the put option level, which means we can take a put here. And the directional move might be qualified for a downtrend. And we are not above the call option level yet. There we go. Put options moving downward. We are below the put option. We are above the call option, slightly at the open. You could go ahead and execute a straddle here. below the put option into bearish trending. You can continue to execute your put. Below the put option, above the call, or below the call option. Call option is invalid. Put option is valid. We are above the call and below the put. So at this point, this could be a straddle where you put a small call on while you're running your put. And we are again above the call or below the call. Sorry, below the call and above the put. So this is neutral. Breaking down, we're below the put. So our call option is going to be basically fairly worthless. Or not worthless, but weakening. And again, as you move below the put level, you can just eradicate the call. So we move through the cycle. We're at 8:30 in the morning. We're still below the put option level, below the call option level. This is essentially bearish put option time. We are moving back into the middle area, so this is more neutral. And we are getting that rolling bullish trigger here. So we're now above the call option and above the put option level. This is now bullish, roll to bullish. Above you started out here below the put option, but we rolled up above. So you would have potentially hedged here with a little put if you wanted. And again, as we start to move higher, you can see that we're getting into the 9 o'clock hour. Rolling cleanly bullish. And it gives you really these nice trigger levels. So this is a little pullback. Doesn't make a lot, but it makes a little. Still bullish overall, guys. Now what we're looking for, we're in the middle of this zone. So we're not above the call level and we're not below the put level. You would be running your call if you had it, pulling profits here, and you'd be essentially trying to move to kind of a neutral position until we get a new trigger. Again, in between them, tightening back up. So we're still getting that mixed trigger. We're losing our bullish trigger. Now we go bullish again, full on bullish. So you can start looking at where this call option is, seeing as though 563.39, you're below it. If you wanted to be aggressive, you can put a call option on at basically 563. You see the strike price up here. The target is 565. There we go, rallying higher. So now we're in the middle of this pullback. We're below the put in a bullish trend. So at this point, pull profits, maybe hedge with a small put option. We're still bullish, looking to try to get another rally phase out of it. We roll into sideways trading, still bullish. You've got your hedge with your put, hopefully. Moving down, so we're losing some value in the call option, but the put option is making money. We've now gone to bearish trending. We've gone into neutral. If I remember right, this is Friday. This is going to be neutral out through the end of the day. Bearish, neutral, goes back into potential bullish rotation. So you can like maybe start picking up some calls. Moves up quite a bit in one bar. That's 5 minutes. Goes up again. Now we go into bearish trending. So if you wanted to, you could start potentially picking up a put, hedging your longs. We roll into more bearish trending. We roll down. Stall back out. We're in bearish trending right now. You can see bearish expectation. Move a little down. Move a little down. Move a little sideways, but still trending in this bearish predicted trending direction. Down we go. Down we go. Rolling. No real change in the predicted direction yet, so we're still generally bearish. We roll a little bit. Now we've gone into neutral, bearish. We'll see what happens on the next one here. And there we go. Now we're back to bullish. So again, this is 5 minute. We're getting a lot of, sideways type trending here on the SPY, but you're going to get it also for 10 minute and 15 minute and 30 minute and 60 minute, hopefully. So you can see here, we go back to some of these previous bars. Just give you an example. Well, let's look at that pre-market. So give you an example of some real trending, right? Okay, so let's spread this out and bring this down so we can see it. And here we go. 5 minute, go to 10 minute. And here we go. Rolling through. Pay attention to the direction. It's telling you in this uptrend that it's predicting a downtrend in the near future. That's what this is doing. So here, as we flatten out, it's predicting an uptrend. Here we get a little neutral. Here we're predicting a downtrend. So as we're moving up, it's telling you, hey, get ready for a roll potentially downward. We move over, we roll, we're in between the put and the call options. We're just getting right at that put option level. So now the darker color means that this is a secondary trigger, meaning that we're not 100% there yet. So here we are. Now we've rolled into predictive bearish trend. We're below the put level. Now we can start getting into this downtrend. We're below the put level, below the put level, below the put level, bearish trending, and here we go, guys. Downward, 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 downward. Now watch here. See, now we're getting into this bullish trending. This is now telling you that in the next, 5, 6, 7, 8 bars, you should be prepping for a bit of a bounce and looking for that call level to come down and giving you that opportunity to potentially catch that rolling trade, that upward trade, that rollover. So we'll continue forward. We're still in bullish trending. The call level's moving a little lower. We're moving a little bit lower. We get a little green bar here. Now you want to be cautious of these initial ones, keeping potentially a straddle on, meaning, one put possibly and one call, giving you the opportunity to trade both sides. And what you would do at that point is, as you start to see the trade mature into trending, like we're seeing right here, you would offload your last put and let the call run. Now we move into bullish trending. We move into slight sideways. You can see we're predicting bullish trending here. So your call option is really the primary trend. We start to roll, we get more bullish trending. We get into somewhat neutral trending here, but still bullish. We get into neutral trending, slight roll down. So you can take a little pressure on your calls. Now we've moved into bearish trending. So now the call option should be done. We're moving into bearish trending. We're looking for confirmation. We're starting to move into the day. We move back into bullish trending. Your call option is valid now. And again, this is for short-term traders. Nice rip to the upside with that call option. We start to move into neutral trending, but we've got in bullish upper trending. That's that upper level right here. This is bullish short-term, bearish intermediate term. Means we should get a roll. We should get a roll eventually into consolidation. There's our roll. And as we start to move down, we're looking for that breakdown period. Moved into bearish and then bullish trending. Again, let's see how it plays out. Sideways, sideways, slightly bearish. And again, below the put, so you can play it. And predicting it's going to go up is what it's saying right now. So it's moved to still moving up. Let's see if it gets up. We move into bearish trending. We're at 9, 10, 11. Rolling down a little bit. Big pullback. And looks like we get into a little up bar here. See what day this is. This is the 20th. So it's still predicting up. Neutral, up, up. Now we're after markets. Predict. Here's a breakdown the next day. And roll. This is the day we went through earlier. You can see how we just roll right through here, giving you trigger direction. So now, the point behind this is to give you guys the ability to target options more efficiently, hopefully. So again, I'm going to be giving it to you in the same format that we have here. The 2-minute, 5-minute, 15-minute, I may add 10-minute, 60-minute, and daily. So you're going to be able to look at these triggers with the options on all of these formats for all these different symbols. Now, I've got a little work to do before this is going to be available, but this is going to be available this week. I'm going to put it up this week, try to get this server set up. I mean, this is it running in demo mode. This is the consolidator running in demo mode. So right now it's working, it's consolidating, it's doing what it's got to do. I've just got to check the resources on the server, make sure that this new code is not process intensive, and try to clean it up. It's already outputting the data, so I know it works. I'm going to try to get this set up for everybody. So the point again is, you know, this is not about gambling. It's not about, you know, having too many triggers. I want to give you the tools to try to make the best decisions and to try to determine how you want to trade. So I found that swing trading or 0-day, you know, DTE trading options, or 1 DTE or 2 DTE, can be very lucrative. It can also be very dangerous if you're not paying attention to it. So the point of being is I'm trying to make these tools available to you to be able to trade very efficiently. I want you to be able to come get the information you want, know what the direction is, know what the trade is, and hopefully be able to make 4 or 5 really good trades a day off of this data, and then call it quits. I mean, my opinion, guys, you know, if you can do 10, 20, 30% a day on your trades on a small amount of capital, I mean, you're done. You can turn a $1,000 account into a small fortune. In fact, I will show you. You come over here to MENT.com, and if you can do 40% return on investment every 20 days, you can turn a $1,000 account into $155,000 in 1 year. If you can do 50% return on investment every 20 days, remember that's 3 weeks. That's basically 10%, 15% a week. You can turn a $1,000 account into $430,000 in a year. Okay? It's doable as long as you learn to trade effectively and take the best trades. Now, this is, again, average. You can have up and down weeks here. This is just basically 40% compounded on 1/3 of your capital. Sorry, on your total capital here. So you do 40% on your total capital every month, every 20 days, 3 weeks, and you can make a small fortune. You literally can turn your life around if you learn how to do it, and that's what I'm trying to do. So my idea here is to give you the tools back over here between the Fibonacci system, the option system, and the TT scanner trades on top of all of my other research. I think this is going to be a very unique set of tools for, you know, really for a very inexpensive rate. I mean, other people charge, you know, $100, $200 a month. And really, guys, you know, I'm charging quarterly rate $169, annual rate $599, Expert Growth 60-day trial, $75. Expert Growth 6-month trial, $169, $170. And then remember, these bill out at, at like $40, $50 a month after your trial. So look at this. This is really, basically about $58 a month to pay quarterly. Or at this point, this is, $53, $51 a month pay annually. That's pretty cheap to get all of this to help you trade. I think you can make more than, 4 or 5 or 10 times what I'm charging you to use all of my tools to get all of my research and to really pay attention to what's going on in the market. So, really, if you want to, come check it out. Go to MENT.com, get started. This is where I'm at with this is actually about 2 weeks old. I'm sitting right around $3,000 right now. I took some positions on that downturn, looking for that bottom that I was expecting. It didn't happen. Those were 0 DTEs. Kind of learned my lesson about trying to jump into the market a little too soon. Took 3 losses trying to catch a bottom. And then I said, I'm done. I'm letting my other trades play out. I've got some gold positions right now that are doing very well, metals and miners. And then I took a new straddle trade at the end of the week last week in the industrials. So we'll see how it breaks. And that's a 2.5 week option. So, I've got basically 15 days plus to see if I can turn that into a little profit. But again, I am still, when you look at this, I am still sitting around $3,200, $3,300 off a $1,000 starting account. I'm doing essentially up 225%. And again, if you know anything about me or have been following me, you do understand that I've had 3 members of my family having medical emergencies over the last 2 weeks. So that's why trading, I've not really been trading for 2 weeks. I have been basically taking care of family and taking care of what I need to. So that's what happens in trading. I'm trying to show you here how with the expert, with the $1,000 challenge, that you can still do very well and not having to chase trades every day. It's a matter of trading when you want, getting back on target. I'm only about 60, 80 days into this, so I'm right in this area here. I still have a long way to go to try to get to this level, and I can make up time if I fall short. That's how it works. I'm still up 200%. I'm up to 3,200 roughly, but the long and short of it is, if I fall a little short, take a few losses, it's a matter of learning, not blowing up my account and trying to get back in the game. Okay, guys, so that's it for now. I'm going to get back to the other videos. Hopefully, this all plugs together. If you want to gain access to it, like I said, just come to MENT.com. Click up here on pricing. And go ahead and try either the 60-day or the 6-month trial. Those are your best deals right now. It's the same as a quarterly rate. Understand that, you will pay a little bit more monthly for this than you would here or here if you break it down by month. But these are great ways to go ahead and get started. And you get my gunslinger tools for free. Okay, guys, I'll talk to you later.